Carter. I'm a client portfolio manager on Npower's optimization desk, and welcome to this morning's market update on Wednesday the 29th of October. Three key points to be aware of today are: number one, the gas system is extremely short. Line pack is currently forecast 38 MCM short this morning, with BBL and LNG flows down, but LDZ demand has picked up, supporting prompt and near curve prices. Number two, following the publication of National Grid's winter outlook yesterday, which highlighted the tight capacity this winter, power day ahead prices jumped 22% to over £52, helping to firm up a lot of the curve prices as well. And finally, number three, the power prices on the front curve today have opened about 20 pence per megawatt hour higher than last night's close, but again the front seasons are a bit more sticky and have opened relatively flat. If you'd like any more information, please contact us on the email address provided. Otherwise, if you'd like a bit more detail, please continue to watch. The gas system shortness, as I said, has been caused by higher LDZ demand as temperatures have dipped slightly today, although we do expect them to pick up again tomorrow. On top of this, the BBL flows are much lower than they were yesterday, and there are reduced Norwegian flows via Flag, and receipts into Eastington-Dimlington are also down on yesterday's nominations. We have seen medium-range storage sites already begin to withdraw to help balance the system, and expect this to increase during the day if prompt prices continue to nudge higher. Currently, gas within day contracts are changing hands for 53 pence per firm. This is nearly a 3.5 pence per firm premium to the weekend prices, helping to encourage that withdrawal from medium-range storage. This has pushed up the front month contracts 0.5 pence per firm to 54.25. Meanwhile, this power system has peaked margins of around 7.5 gigawatts today, as wind out turns as forecast under a gigawatt, with CCGT ramping up to 15 gigawatts to help displace that. The November 14 power contracts are yet to trade, but Q1 15 has opened at a premium of 35 pence per megawatt hour to yesterday's close at £50.25. Seasonal contracts for power have opened trading pretty early this morning in comparison, with summer 15 at 48.20 and winter 14 at 52.95. That's pretty much flat to yesterday's close. The equivalent gas contracts have also opened at a slight premium to the close, trading at 52.65 and 60.15 respectively. No news yet on the Ukrainian gas deal, but there was some interesting stuff, as I said, from National Grid's winter capacity outlook published yesterday, which is helping to support power prices. They forecast spare capacity this winter falling to just 4.1%. This is in comparison to around 5% last year, due to the recent string of unplanned outages. Our opinion here is that if the market is certainly building in some risk premiums for this, but should EDF's nuclear fleet return as scheduled through Q4, these premiums may erode, as the peak demand is likely to be in the cooler Q1 15. Also worth noting that oil prices have firmed up slightly today to just over $86 per barrel, supported by short covering and drawdowns in US stockpiles. And also, Britain's Energy Minister is confident that the acceleration of the carbon market reform could be finalised as early as April, building on the momentum of last week's EU deal, although carbon prices are pretty stable at around €6.25 per tonne. That's it for this morning's market update. As always, contact us if you'd like any more information.